Hey everybody, this is Jim at SP500chart.com. It's a little bit before 2 o'clock on Sunday afternoon, November 8th, 2015, and we're going to take a look at the S&P 500 chart for the week ending November 6th. Going to take a look at the week in general and see if we can decipher anything that might be going on in a short-term chart. And we're going to start off by looking at a very long-term view of the S&P. Just to kind of maybe put things in some perspective. Before we do any of this, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we're starting out here looking on a 4-day chart. That means each candle, and you should know what a candle is, but if you don't, a candle is, hold on, let me read. I thought I had that thing all set up. There we go. That's the position I want it. A candle is one of these vertical elements in this chart right here. And when you're looking at a 4-day chart, each one of these candles tells you what happened within a 4-day period. I've chosen the 4-day chart because this takes us all the way back to the 2009 lows of 666, a rather ominous number in the S&P 500. And it also, I want to show you this. I've got this big red circle here, and I want to show you why in the summer of 2009, I became a bull. And the reason was we had an inverted head and shoulders pattern right here. Left shoulder, head, right shoulder. And we broke out of that. And just to remind you, when that happened, these large inverted head and shoulders patterns tend to mark significant bottoms in the market. If we go back, we can see another variant of an inverted head and shoulders pattern having marked the bottom of the that came up out of the 2003. You can see prior to then all of the bottoms had been single thrusts down over about a 2.5-3 year period. Then you had this triple structure. Then you came up and had a nice bull run. Then we come down again after putting in a head and shoulders top, and we form an even better formed inverted head and shoulders pattern that has now lasted in a rally in excess of 6 years. So going back to that 4-day chart. Additionally, we identified we've had this line on the chart for quite a while. This is our top resistance line, which is extremely well formed and I think will be very valuable going forward. We did revise this line, however, in 2015 because these support lines don't always have their starting data point as the extreme low. And again, if we go back to that 9-day chart here, you see the same thing happened with this inverted head and shoulders pattern that formed in 2002 and 2003. Once you broke out over that, once you got over this line, that was when your reliable rising support line really started to make sense. So I'm sort of doing the same thing here. And so far that appears to have been a good call because, as you can see it here, this line was put on the chart right when we were down at these lows with the idea that if we bounce there, then we could be setting up a move to return to this top line here. But I think almost certainly we knew if we bounced there that we would come back and challenge our extended neckline of this head and shoulders top that I'm now showing you with my cursor. So here we are on a daily chart. There's the head and shoulders top. There's the breakdown. There's the double dip. There we are getting over that mid double bottom rally point, and we are now just well north of so many trend lines that really could have put up a more significant fight. Again, here's the line uh, that I think that was our midpoint in our double bottom right here. Got over that, back tested it, started to head up. Now, just like I showed you that long-term trend line for the rising channel that ignored that bottom, the extreme bottom in March of 2009, now it looks like we may be dealing with, in a much, much, much smaller way, the same kind of thing, where we have a fairly reliable resistance line, but in order to find a support line, we may have to just abandon these lows back from the latter part or the very late September. So going forward, we're now considering that this may be our path to our target of 2188. Where do we get 2188? Well, to remind you, we look at our double dip here. This little, I call it a double bottom, but I feel silly doing it because it's not really a double bottom. It's more of a continuation pattern. But we go and we measure the height of that pattern. I'll do it again with a straighter vertical. There we have it. Then we look at where we broke out, and that gives us our target right here of about 2188. So what about the week? What happened this week? Well, the week really ended up very mildly positive. It was a positive week, not extremely so. If we go in and we look at it, if we look at the weekly chart, now each candle is 1 week of trading. Here it is. We close at just underneath 2100, with the high of the week being about 2116, and nothing shows any signs of bearishness at this point. Now that is not to say that we could not break this channel and still make our target. Matter of fact, I think that is a very possible thing. We could break down here, back up a bit, and then come back up for another leg up to make that 2188 target. That wouldn't surprise me. So all of that to say, I can't tell you how, I can't show you the path that takes us to 2188. All I can do is to say there is a high likelihood, based upon that double dip, that we do make 2188. And so far, the trip off of that breakout puts us between two channel lines right here, and I think right here. So the week was positive, not extremely so. And if we look in a little bit closer, you can also see that coming off that tag on resistance, we started to sell back down, and maybe on Friday we started to see maybe a hint that that we are now ready to break out over this line and to start the move up, back up to our resistance line. Now, a word on what happens during the last few minutes of trading on any Friday afternoon. Take it with a grain of salt. Traders tend to liquidate short positions on Fridays, tend to get out of long positions on Fridays. So I think this is a hint that maybe the market on balance was a little bit in anticipating a positive week that starts tomorrow. But obviously that's a tiny little blip above above this line. Did we close at the highs of the day on Friday? And the answer to that will be seen by looking at the candle, and the answer is almost. There's our candle. What do they call a candle where you have a narrow real body and a tail that has a little bit of length to it? Well, you could say that this is maybe Friday was something of a the start of a reversal process off the 3 down days that we had in the S&P. And the reason I say that is that plunged down a little bit, but then recovered to close in the high part of the range. Not exactly the high part, but very near the highs. Looking at a 10-minute chart again, there you see it. There's our trading on Friday. And you can see that this little short-term trend line right here drawn across the short-term peaks from the 3rd, 4th, 5th, and 6th, that it shows it may be a little willingness to break out over those levels with that late day Friday move. But again, we're talking about something of about 2.5 points. Not really worth getting too excited about. So I think we learn more coming into the week, starting tomorrow on the 9th. And what I would be looking for is potentially either we come back and tag this line with some early weakness to see if perhaps we bounce there, or if we start out strong, then I would be prepared for a back test of this line at some point, and it would not surprise me one bit that if we back tested that line, we might do so at this line right here, that it might also correspond with a tag on our support line. So basically, I'm looking and looking for 2080 to be support upon any initial weakness on Monday, and for the 2080s to continue to be support throughout Tuesday. Guys, what can I say? If we do get that 2188 breakout, 2188 target, the cool thing is that also takes us above our line right here that is at about 2149 or so. And where is that line drawn from? It's drawn from a series of highs throughout the year 2015. We got above it just a little bit here, but you can see a lot of things kind of line up where that was a constant level of resistance. If we come up to that line, I'm going to extend that now, and are able to, if we come up to that line and meet it with initial resistance and back up a bit and then come back to try it again, there is a possibility, guys, that we could be dealing with a complex and large inverted head and shoulders pattern. And if that is the case, then when you look at the larger picture here with this channel between these two blue lines, you could see that getting above this line, if it ends up being an inverted head and shoulders, would seem to be a pretty good indication that we will head back up for this top resistance line significantly into the mid 2000s. That's very, very, very forward looking. So right now, I would rather let's just concentrate on this target level here at 2188. Again, that's higher than this line, okay? But this is the line that we have a rationale for an expectation of hitting. And again, that rationale is that double dip down here. So guys, there's your video for week ending November 6, 2015. Let me just put this back on that 30-minute chart again to show you. Here's our channel, support, resistance. This may be a consolidation channel right here, taking us off of our tag of resistance, bring us back down to support, where hopefully we get a nice bounce. You see, the last time we hit support down here, we got a small inverted head and shoulders pattern. The time we hit it right here, we sort of got a little double dip. And so all of this is looking pretty good. Let's just see what happens this week if we get some clarity to this. And like I said, even if this support line breaks, that does not automatically invalidate our call for 2188. It just means the road there gets a little longer and a little trickier. So guys, thanks for watching, and as always, thanks for your very, very kind support. Take care.